Hey, welcome to the Digital Remodeler Podcast. So glad you've chosen to join us today. With me is Kimsey Hollifield from Hollifield Financial, and so glad to have you with us, Kimsey.
Thanks. Happy to be here.
And today, what we're going to be talking about is we want to get into the topic of having a financial plan. Often on our podcast, we're talking about marketing strategy and operational things, but we really want to get into the topic today of thinking about your financial future. And so I've invited Kimsey to have this conversation with me. And Kimsey, so glad you've taken that time to do this today. And so, if you would, just give us a little bit of your story. Tell us a little bit about Hollifield Financial, a little bit about what you do, so the audience has a little bit of overview of your background, and then we'll kind of dive into the topic here.
Yeah. So we're a financial planning firm, and when I say that, a lot of people, say, what is that? And in short, I founded Hollifield Financial Group about I guess 13 years ago now. With the purpose of helping people with their retirement accounts, with their investment accounts, and along the way, being a business owner, you have all these things that pop up like you guys have, but so you're looking at it from both ends. My business really is I'm a fiduciary investment advisor. I help people with those investments, setting things up, and we'll work with attorneys and tax preparers and whatnot. But then on the other side, I'm a business owner as well, so I understand all of these things that pop up personally that you're like, oh man, I just can't do this. Or all those frustrations that make it really difficult, as an entrepreneur. So I kind of come to this conversation wearing both hats, so to speak.
Absolutely. So you use the word of the day, fiduciary.
Yeah.
Describe what that means to our audience. What does that mean?
Well, fiduciary is a funny word because it's supposed to mean that you act in the best interest of your clients. Now, if you don't have a heart to help people, and you're not an honest person, you could be a fiduciary and still not do a good job. But fiduciary means that that you're licensed in a way that you're supposed to act in the best interest of your clients. I like to use the term independent fiduciary. So I'm an investment advisor representative, and we use a registered investment advisory group called Brookstone Capital Management, and through them we are able to offer pretty much any solution, any financial product, on that side of the arena, as in addition to the insurance products, life insurance, annuities, all those things. When you put those two together, my business can pretty much offer anything, any strategy. That's the independent side. And then the fiduciary side is not only are we licensed to where we actually have to offer what we feel is the best for our clients, but that's really my heart too. I mean, I love this business. I'm not just in it for the heck of it. I actually really enjoy it. And so I enjoy putting these plans together, looking at all things out there, and then getting something great for the client.
Perfect. Yeah, the reason I wanted to bring that up is a lot of people are familiar with the transactional type of quote unquote
Oh,
advisor. And so I wanted to help distinguish that before we got into our conversation so they kind of understand what your perspective is as we talk. And so one of the things that I wanted to bring you on for, it's not uncommon for a contractor to start their business. They're very good at what they do. They've got good craftsmanship, good workmanship. They start to build a reputation for themselves, and their business starts to scale. They go from being a one-person show to now they've got some helpers, and now before you know it, it's multiple crews, and they've got a real business on their hands. And at some point they sit down with the tax preparer and the accountant, and the discussions come up. It's time to form the LLC, and and maybe the corporation, and now we're starting to get into discussions of income management, tax management, retirement planning, those types of things. And so, if you would, let's talk, from that entrepreneur perspective, what all really does need to be looked at in a holistic financial plan. Obviously, taxes are a big thing. It's not just the revenue you make, it's what you're keeping at the end of the day, profits and losses, and how much are you giving away to the government. But what are some of the other considerations, Kimsey, that a entrepreneur really needs to be thinking through?
Yeah, so good question. It's you have the financial stuff, which there's a book that I really enjoy. It's called Profit First, and it's a very simple book, and it talks about how to take your revenue and think about it as a percentage, and then where is that going to go? So, if I get paid $100, um, you know, you have like sort of different buckets, right? And I believe that you should have different accounts. So in my business, we have different accounts. If I get paid, some goes over to the payroll account, some goes over to the monthly bills account, some goes to taxes. We have a giving account where we put a percentage, and it gets sent out to different charities. And then, profit, marketing. So I would say a really simple exercise is to take a look at your business. And if you're a contractor, you might have different buckets than I do. But if there's anything that is a significant expense, then make an account for it. And when you get paid, just divvy it all up and into different percentages. And if you end up with a lot of money in one account, and one account is always, down, well, you can shift that. It's not a hard and fast rule, but it's a good way to, as you're going through, just to be able to see, where everything's at. Because otherwise, what happens is we get paid a lot of money, and then it sits there, and we say, "Oh my gosh, I have all this money," but okay, well, you didn't pay for your marketing, you didn't pay for your payroll, you didn't pay your taxes, and then next thing you know, you spend it all on whatever you think is what you should do, and then it's all gone, and then you're like, "Oh my gosh, I didn't pay my taxes." So just divvying that up is huge. And so Profit First is a book that I like, that just does a really good job at that. And so that's probably where I would start. We could get into the conversation of, how to, different tax deductions and different ways to plan to pay less, for sure. But the first thing is just to have it organized, because if you're a contractor or whatever you are, whatever your job is, whatever your business is, you probably didn't go into that business so that you look at spreadsheets of finances all day. So you want to make it simple, divvy those things up so that you can spend your time doing what you really love and what you're really good at.
Good. So let's talk about, one of the things that I think a lot of, the people we work with are hesitant about is they maybe don't feel like they're far enough down the road to start the conversation with a financial advisor. Well, I haven't quite hit this number, whatever that number could be. Maybe it's too early for me to start working with a financial advisor. When's the right time to start having those conversations?
The right time is now, if you're thinking about it. If it's something that's on your mind, then, but it's my industry's fault for a lot of people having that thought, because people think I can't go talk to a financial advisor until I have all my finances right, or until I have a lot of money. They won't talk to me. And that's not the person's fault. That's my industry's fault, because a lot of people in my industry are very, I don't know what the word be, but it's not that they look down on people, but it's like self-importance. And so think about it. If you were wanting to lose weight, you wouldn't wait until you lost weight to try to do a diet program, or it just, if it's something that either you want to do, you want to get your finances straight, or you want to open some investment accounts, then now is the time to do it, and if you go in to meet with somebody and they make you feel bad about where you are, then they're probably not very good at their job, and because a big part of our job is not just taking money and multiplying it, it's actually, talking to people and helping people, and so if people are having that problem, it's not their fault. It's the industry that needs to change.
Absolutely. So when you meet with, you know, clients, what would you say are some of the top mistakes that you see people making when they first come to you? Now, we're going to assume once they come to you, they're not making mistakes anymore. So, well, let's preface this question. But what are the mistakes you see people making, especially business owners, that boy, if you could have just intercepted them uh,
Yeah.
a little sooner, you could have saved them some pain. What would
Yeah.
you say those are?
One of the big ones is something I call dripping nickels, and this used to be a big thing for me when I was younger. And when you start a business, you're worried about the dollars, and you're worried about the top number. You want to make more money, make more sales, but then you don't realize that as you're going through, all this money is falling through your hands. And it could be things like easy things, extra subscriptions that's coming out that you didn't know. Um, your internet is costing you $50 more per month. Your phone bill, your power bill could be less. You're not keeping a buffer, and you're underdrafting your bank account, and you're paying all these bank fees. It could be anything, but when you think about it, it adds up. And I do an audit twice a year where I sit down, and my wife thinks that, she kind of like, she likes that I do it, but she kind of pokes at me because I'll sit down and I'll call my cell phone company and say, "Hey, look, I've had you for 12 years. My rate's a little high. Can you get it lowered?" And a lot of times they'll say, "Yeah, we'll lower it by $20 a month." "Oh, thank you." "Okay." Internet company. "Oh, man, this internet's getting expensive." And I try to find ways to save money. And that money that you save then can be invested in, investment accounts, or maybe you need that to run your business. And so that's the biggest thing with well, that's maybe one of the biggest things with business owners. And then the second biggest is what I talked about earlier, is just not having the finances, organized. And the third, a lot of business owners don't even have the right business structure set up. And that's huge because big tax benefits, and a lot of things, just having your business actually set up is important. So those are probably the three things, aside from like delegating and growth and all that other stuff. But those are the three things that people do early on that they don't necessarily think that they can keep from doing, or they can't help, but you really can.
Exactly. Do you find that a lot of the business owners you work with, also besides structure issues, do you find a lot of them have not done any continuity planning? They don't have those things in place either.
Most businesses, yeah, most businesses in my industry, it's probably as bad as any industry. It's interesting if we're talking about construction. I would say construction and that industry is probably a lot better with continuity planning than like the financial services industry, because it seems like a lot of the friends that I know that are in that business, they work with their family, or they work with their dad or whatnot. Um, it's probably not, you know, done enough, but it's a lot better. In my business, financial services, I end up seeing all these people, and they're older, they're 60 years old or 65 or 70. And my industry is very old, and I'll be on these trips with these people, and they're really successful, and I'll say, what, whenever you retire, what's going to happen to the business? Oh, my son's going to take it over. Oh, that's great. Is he in the business? No, no, no. He's not. He's never really worked. He just, you see that a lot where there's no continuity plan. They think their kids are going to take it over, but they've been really successful. The kids have never had to go through the process of grinding it out and building a business. And continuity planning is something that people shy away from because they're scared of it. It seems like a big word. I guess it is a big word, but it doesn't really have to be.
Yeah.
It can be just having some sort of plan in place, and it's very important, very very important.
Exactly. Yeah, one of the things I think is also critical, is having the right, I call it, team of support individuals around you, and maybe you can speak to this a little bit. I think every business owner needs to have a financial advisor, an accountant, and an attorney in their corner.
Mhm.
And those three, not just in their corner, but those three need to talk to each other.
Yeah.
And so, uh, if you can speak to that a little bit as well, the importance of having that team working with you, so that there is continuity to all of your plan, that each component is working in synergy with itself.
And you hit the nail on the head. They need to talk to each other. Because what happens if you don't have the right setup, and we try to do a good job of this with our clients. We try so hard on this. And the CPA, I'm the financial advisor, but I'm not the CPA, I'm not the attorney. But I like to look at myself as like the quarterback of the personal CFO. And I want my clients to come in, and I want to look at all of their information, make the plan, and then if they have a CPA, I want to be able to communicate with the CPA if they have an attorney. Because what happens is you go to the CPA and they say, here's how much you owe in taxes. See you next year. And you ask the CPA, well, what do I do to get that number down? I don't give financial advice, but I'll see you next year. And then so you go over to the financial advisor, even if you have one, and you say, I had to pay all this money in taxes. How do I do? Oh, no, I don't give tax advice. But by the way, on all these tax deferred accounts, you should do X, Y, and Z, but I don't give tax advice. And if they just talked, it would be so much easier. And so I try my best to, if I make a recommendation to a client, I try to have that conversation with the CPA, or be able, because otherwise what you end up with is you end up with a busy business owner who then has to, with all their other business, they then have to call the financial advisor. Did you get that from the CPA? Hold on one second. Let me send it to you. I can run it down. And you don't want to do all that because that's not your job. And so those three things are great. I would also probably add a business coach. You could probably add several other coaches down here, depending on what business you're in. But people have expertise in areas that we don't have, and there's nothing wrong with having like different people on your team that can help you in a lot of different ways.
Exactly. And so, kind of as we kind of bring this around, let's just kind of talk about. I'm going to call it the stair steps in the financial plan. So if I've done no financial planning at all, just now getting started, what would be step number one?
Step number one would be to either a budget, which nobody likes to hear the word budget, but either a budget or some sort of separate account, like an investment account, depending on what you're struggling with. And that could be, a very simple budget, or it could be, as simple as a Roth IRA. We have people that put $50 a month into a Roth IRA. We have people that max them out, 401ks, just setting something back. One of those two would be step one, and the other one would be step two.
Okay. And then what would be maybe the next step beyond that? So if we're kind of looking ahead, what's our next step beyond
The
that?
next step would be, once you have a budget, you have your numbers right, and then you're setting some money back, then it would go into, I would probably say, I would probably call it tax planning, things like, section 179 is a deduction that certainly a lot of construction folks can use, because if you buy a vehicle, I just bought a vehicle myself that qualified for this, but it has to be over 6,000 pounds. And so I got an SUV, and it was electric. So this was great, because here I got to deduct the entire cost of the SUV, and then I got that $7,500 tax credit. So something like that, just having the business own your vehicles for construction. I mean, these trucks that people buy are expensive nowadays, and having that can literally take you from the high tax bracket to, to nothing. And it just saves money. So that'd be probably like the next step. And then if you're thinking about, because you'll probably ask me what's the next step after that, is probably going into that, like, continuity planning, and we could do a whole nother podcast on, like, building out your team and delegating, and and processes, and all of those things. But that'd probably be step 5.
Okay, good. Yeah, I think that's, so many people that I meet, they haven't even gotten to step one. They've had their heads down, they're just working away, and here they are. So good stuff. Let's kind of bring this to a close here. As you look at this from a financial advisory standpoint, and also as an entrepreneur yourself, what are really your top three? I'm going to call them golden nuggets. One is Profit First, great book, Michael Malkowitz. And I agree that's a must read for anybody that wants to structure correctly.
Yeah.
Uh, what other, just if you were to put your high recommendations, what are
Yeah.
your top recommendations for any entrepreneur that wants to get their financial house in order?
Yeah, I would say, folks are falling here, but I would say, well, this is not finance, but this is a great book. I love this book here, Who Not How. I probably read this book once a year. It's all about delegating, but in the proper way. That's fantastic. Buy Back Your Time is one that I'm really into right now, from Dan Martell, and he does so much stuff on YouTube. So that's really fantastic. But from the financial side, Profit First is great. But the nugget that I would give, and this, people hear this and have heard this, but the time, and compounding is so important. Like, if you can put back just a little bit of money, and just over time, and do it now, don't wait 5 years or 10 years or 20 years. It makes such a big difference, because it just compounds and grows and grows and grows. And then the second part of that is to do it in the proper tax structure. So things like Roth IRAs are so great, because our country is deep in debt, and taxes are very likely to go up in the future, and we don't know what the answer is going to be to that. So putting money back in a way that you're not going to have to worry what the tax rate is going to be when you pull it out is massive.
Excellent, excellent. Well, Kimsey, thank you for joining us today, and it's been great having this conversation with you. And how can somebody that wants to know more about you, know more about your company, how can they get in touch with you?
Yeah, so hollifieldfinancial.com is our website. A lot of good things on there too. Um, uh, Education, webinars, different things, and a lot about us. Also, my email address is kimsey@hollifieldfinancial.com. So If anybody has a question, just email me and I'll get on it. I'll get my team on it, and we'll do our very best to do anything we can to help you. That's what I love. That's what I've been doing for a long, long time.
Fantastic. Well, Kimsey, thank you for joining us today. And to our audience, thank you for tuning in. And we hope to have you on our next episode.
All right, sounds good.